Hi, this is Vijay Bambwani here, and I'm back with you in this video to talk about a very important aspect in the commodity market, especially in the energy space. And I begin with my video with hoping that my videos are actually helping you become better traders and your trading regimen has improved substantially after these fast profit daily videos that you have been viewing over the last couple of quarters. These videos are actually made for you, and it would help if you provide your valuable feedback as to what you think from these, what you take away from these videos, how they've helped you, etc. I would love to hear from you. And as a matter of fact, this very video is a direct result of a few queries that I've received from Equity Master viewers, and they've asked me, "Hey Vijay, how come crude oil prices are falling and at the same time natural gas prices are rising? And if at all natural gas prices are rising, why are you waiting in the wings, watching out for short selling opportunities when we could actually go long in natural gas?" So I'm going to answer that critical query, and as usual, I'm going to resort to a 360-degree worldview, which I really swear by and utilize in my trading regimen. First of all, crude oil prices are falling because of two basic reasons. OPEC Plus, which is the Organization of Petroleum Exporting Countries, plus a few non-OPEC members, primarily Russia, coming together, and in the past, like I've mentioned in my videos, they've curtailed oil output deliberately to raise prices. Now, come January, and there is a serious possibility of OPEC Plus, which is OPEC and non-OPEC members, raising the output of crude oil from 1st of January onwards. Now, there is a possibility, there's no consensus. Yes, the Russians might or might not follow suit. It's a very tricky situation here. But number one, the output could go up. Number two, there are these news items based on facts, of course, about a second corona wave in Europe and many countries imposing a second round of lockdowns, which means that consumption of crude oil is likely to fall slightly. Thirdly, countries like Libya, countries like Iran, and to a certain degree Iraq are now raising their output, which means that there is going to be even more abundant supply to the extent of being oversupply and glut in the oil market, which is why oil prices are appearing under pressure. Now, why are natural gas prices, which ideally should have moved in tandem with oil prices, bucking that trend by rising? The answer lies in the US hurricane season. 116-year high activity of hurricanes, and as a matter of fact, over the weekend that's gone by, a new hurricane, the 28th hurricane in the calendar year 2020, has formed over the Atlantic. The hurricane is called ETA, E-T-A. It's now currently a couple of 100 miles off Nicaragua. It's likely to pass by Nicaragua, Honduras, Guatemala, and result in anything between 20 to 30 inches of heavy rains in the region. There is also the possibility of some damage, although the damage may not really be all that extensive as much as Delta did in the past, but it cannot be discounted. As of now, the US Meteorological Department is not very sure that the hurricane can actually come and make a landfall in the US mainland. But the point is that the US actually derives approximately 5 to 6% of its natural gas output from the Gulf region, which is likely to basically get impacted by the hurricanes. And by no means is Hurricane Eta the last hurricane possible. This year's hurricane season is actually an extended one. Normally, you don't get to see too many hurricanes after the end of September, but the US Meteorological Department has actually extended this year's hurricane season to 30th November. So there is a possibility of further hurricanes in the offing. And these hurricanes are forming because of global warming, because the temperatures over the oceans have reduced, both the Pacific and the Atlantic. The temperatures have risen. I beg your pardon. And global warming is resulting in a lot of tumultuous weather out there. Now, the third aspect is the US presidential elections, which are likely to be held on 3rd of November. This is another area where commodity traders are sitting on the fence, waiting in the wings and watching out for any concrete triggers as to which presidential prospect has better chances of winning. Now the point is, with Hurricane Eta coming into the picture, will it disrupt polling in the US, especially the coastal states in the Gulf of Mexico? The answer as of now, as per the US Meteorological Department, early morning on Monday as I record this video, is no. The US Met Department does not expect any serious landfall or disruption in the weather on 3rd of November. But hey, we are talking of a hurricane. It's weather. And there is no 100% foolproof, bulletproof, idiot-proof method of forecasting hurricanes. Which is why the market, just to be on the safer side, has bid up the price of natural gas, which is bucking the trend. And therefore, we are basically pulling back or holding back our hands and not short selling the market as of now. Can we actually go long? That was another question by some viewers of my videos. Can we actually go long on natural gas? Well, the point is, if you can't go short, you must go long. But that is if you're the kind of a trader who wants to be in the market 100% of the times. And since I follow a statistical approach also, the statistical odds of making money by going long don't appear as bright as waiting patiently for the right price to occur and then going short, for the simple reason that the gas market is also undergoing a very substantial glut or an oversupply situation. So much so that the amount of gas which is being flared or burnt has reached a new high in 2020 as compared to the recent past. The consumption has fallen to an extent vis-a-vis the output that the gas companies are actually burning the surplus gas rather than storing it, which costs money. So in such a scenario, going long on gas prices may not really be the ideal situation, even though in the near term you might feel the world or the opportunities are passing you by, the parade is passing you by, and you're missing out on trading profits. If you want to go out there and press a few buttons and go long on your own, it's your call, it's your money. But if you were to ask me, would I bet on the long side? Not right now. I would rather wait for higher levels to go short rather than go long. What higher levels? I promise to keep you posted in my videos, in my mailers that I send out to weekly cash alert subscribers and the viewers here in this YouTube channel. So I'm keeping my ears to the ground for you. I'll be monitoring the situation. More updates are definitely following from me on this front. Stay tuned. Stay vigilant in the market, and I hope you have a very, very profitable day ahead. Vijay Bambwani signing off for now, not before reminding you, if you're watching this video on YouTube, please click like on this video if you agree with what you saw. Subscribe to my YouTube channel and press the bell icon so you get alerts for fresh videos. In the comment section, do let me know what you think about this video and what you would want me to record in my next. Also, help me reach out to fellow like-minded investors and traders who are seeking a 360-degree worldview of the markets and knowledge-based investments and trading output by recommending my video to your family and friends. Take very good care of yourself, your health, your family, your trades and investments. Have a very profitable day. Thank you for watching me. Vijay Bambwani signing off for now. Bye-bye. Do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.